Welcome to Parkbench Tutors. For more information, look us up at parkbenchtutors.com, or you can find us on Facebook. We're going to continue our AAT access work by looking at assets and liabilities. So, how can we understand these ideas? Let's think about assets first of all. A business owns items, and they may be owed money. So anything that's got some worth in it like that is called an asset. Of course, a business may also owe money to others, including the bank, and of course any supplier that it's bought goods off. So everything that is owed is called a liability. So we have assets and we have liabilities. Okay, what is an asset? In this case you can see a shoeshine boy, and it reminds me of something that I read a few years ago. Assets can be very small things for some businesses. In this particular case, the asset for the shoeshine boy, or assets, were his little stool and his brush. The polish that he used and his rags that he used for polishing, those were supplies for the business. So for this particular case, an asset can in fact sometimes be a very, very small thing. But for most of us, it's not quite that way. So that here we have the business, and the main asset here is the premises, assuming that the business here owns the building. Okay, vehicles owned by a business can also be important assets, so it shouldn't take you too much difficulty to think of at least 2 or 3 businesses that have assets which consist mainly of vehicles. Besides the transport shown here, you might also have thought of a bus company or a coach company. Right, here is another image of a farm. Can you think of some assets that the farmer may own? I can think here of, just looking at it, at least 3 different assets that are there that the farmer might own. Okay, here we have a typical picture of an office with equipment. So, office equipment, what sort of things are assets? Computers, yes. Desks, yes. Photocopier, printer, filing cabinets. Now wait a minute, is everything that we own considered to be an asset? So I look around now, I can see the chair in my office, I consider that might well be an asset. My computer is definitely an asset. The telephone, okay, but I'll say it's an asset. The pencil sharpener, no, I don't really think that is an asset, nor the file or the pencils themselves. So in some ways there's got to be a limit, and the limit to whether I consider it to be an asset could be its value, or whether it's going to be used for a long period, and things like that will depend on what the business is. So that for me, in fact, a computer and even the telephone might be an asset. For a very large business, neither of them may well be considered assets, they might both be considered just expendables. Okay, we said that people who owe money to the business are called debtors, right? And if you are owed money, if you've carried out work for someone and they haven't paid you yet, they owe you money, that money is also considered to be an asset to the business. So debtors form an asset. They're usually given so many days to pay, and those days are called the settlement terms. Inventory is an asset. Now in the UK you will often hear inventory referred to by another name, which is stock. But inventory means anything that's made or that is being made. So the items may be ready to sell, items may be produced ready to sell. These are considered assets, right? And as I say, in the UK we also use the term stock. The most obvious asset for most of us is cash, which may be cash on the premises or cash in a bank account. It's still considered cash as a cash asset. Normally we list assets in order of liquidity, and in the UK we start with the most liquid. It's the reverse order, by the way, in the United States, but in the UK we start with cash, and we go to debtors, and we go to inventory or stock, then we go to vehicles, and then we go to premises. And the idea is that these are the things that are listed in order here of being the most liquid. They can be turned into cash most easily. so that cash obviously is the easiest thing. It already is cash. Collecting money from debtors, you collect as cash. Inventory you may be able to sell for cash. Vehicles may be a bit harder to sell, and premises harder still to sell. But this is listing assets in order of liquidity. The liabilities are the money that we owe to others. We may owe the money to the bank as a loan, as a mortgage, or as an overdraft. And if we owe money to others, then we have creditors, right? Those to whom we owe money. And those amounts are called liabilities. Let's finish with another idea here. I have £150,000 worth of assets, and I have £50,000 worth of liabilities. How much do you think I am worth? This is the important idea for accounting. If I subtract from the assets the figure for the liabilities, then I have something called equity. You will come across this little equation time and again in accounting. This ends our short podcast, brought to you by Parkbench Tutors and narrated by David Hopcroft. Thank you for watching and for listening. We wish you success in your studies. For more information, look us up on Facebook or visit parkbenchtutors.com.